Gabriela, is there demand for all of them?
I think that's the big question, especially in a backdrop where some concerns around global growth and the cycle are starting to come back. So I think perhaps we might see a little bit of choppier markets here over the next few weeks, especially as some of this new IPO issuance saps some demand for some other names. But ultimately, I think, honestly, the story for the rest of the year should still be positive for stock prices broadly. It might just take us a little while to get there as we look for some more confirmation on the growth picture.
Yana, how do you see all of this new hot supply coming to market affecting the overall markets?
I think I'd echo those comments, and the fact is growth continues to be in short supply, and there is continued demand by investors for secular stories and disruptors and enablers. You mentioned just a couple that are within that space, but it's across the board within the consumer, healthcare, and the tech space. So there's basics of economics that are going on right now, and that is the basis between the supply and demand. And there continues to be an increased demand for growthier areas of the market, particularly as uncertainties are still with us as it relates to global economic picture.
Yana, you run a growth opportunities fund. Does Lyft have a place in that conceivably? And if so, where would you like, at what price obviously becomes the key component, but is it something you'd be interested in?
We run our focused growth strategy, and we invest between 25 to about 40 positions. And as growth investors, we're interested in all kinds of growth, from secular growth stories like Lyft to cyclical and stable growth stories. And I would say that it certainly is a disruptor, and we are intrigued by the opportunities that a few companies are playing within that space. But I think right now, as it relates to what we're seeing in the marketplace, there are just a lot of other opportunities in other areas of the market, like healthcare in particular, that continues to be selling at a discount to the overall market, with sizable growth opportunities within pharma and biotech space, and also pockets of consumer that we are intrigued as it relates to home improvement and repair and remodel market. So a lot of opportunities, and I think that highlights to investors that there are a lot of choices. There's not just one stock and one IPO. There are thousands of stocks and a lot of industries that one can participate if you're seeking growthier areas of the market.
Is growth still where it's at? It's funny because
so.
We go back and forth. Yeah, I know you do. I'm curious as to what Gabriela thinks here, given you
I think the market does
obviously.
too. Growth has outperformed year to date and last year, even with all the so.
Yeah, we keep waiting for value to actually emerge, but it doesn't seem to.
We do still see room for cyclical value, and here really it's about the balance between capital appreciation and income. So we really continue to talk to our clients about finding ways to gather a little bit more stability as we move through to the later part of the business cycle here in the U.S. And there are some cyclical value sectors like financials and energy, which can provide you that nice balance. So I do think growth, of course, continues to be a structural story, especially in a sector like technology. But there's also here a balance to be found in other areas of the market as well.
I mean, we really are coming off of quite a quarter. Best quarterly performance for the S&P since 2012, with the S&P up 12%. I wonder how long the window is open for these IPOs.
Of course, that comes on the heels of the worst December since 1931. So I think part of that was just unwinding some of the extreme pessimism from late last year. We do really ultimately think that the U.S. expansion continues. It's a global downshift, not a stall. So it makes sense to have such a strong quarter after so much pessimism late last year. But as I was saying earlier, I think we're in for a little bit more chop here because now we need that confirmation of stability in the actual economic data, and that might take a little while to feed through.
Yeah, Yana, finally, just to you, I look at your portfolio, and I'm just curious, what do you think in terms of the allocations you have is going to differentiate you from the performance of the S&P 500 index, which I know you're competing against, given all the passive money that seems to be flowing there?
That's a great question. I think one of the ways to do that is through industry skews. And again, I'd go back to the opportunities in front of us that have been sort of left behind by the marketplace. While the average stock in the S&P 500 is up over 13%, healthcare as a sector is actually trailing that, particularly within pharmaceutical and biotech space. So those are areas of the market that we are overweight relative to the benchmark. We're benchmark relative to the Russell Russell 1000 growth. So there are pockets of opportunities within the industrial. So talking about, picking our spots within the cyclical opportunities on the heels of stronger U.S. consumer and housing market.